Okay, good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for August 14th, August 13th, 2020. So yesterday we had what I felt was a decisive recovery from Tuesday's sell-off. Wednesday was a strong vote to the upside. And we talked about what kind of a follow-through were we going to have. We saw the potential for an upside gain, potential for a downside move. So if this represented something like the midpoint, what were we going to get? Were we going to get something that finished in the upper half, or something that came down and tested the lower half? And we got the upper half today. Now, what we didn't get a breakout to the upside. Instead, what we got was just kind of a half step up. It failed to fail. It teased a higher move, but really it felt more like a consolidation today. There was a slight gap down. Sold off, recovered, sold off, and basically gave it kind of a doji style of a day for the total travel distance was about an ATR, but the net result was just a fractional loss. So this was a pause that consolidated kind of a day. All right? So we did not get a decisive move in either direction. I consider that actually to be a slight positive. The fact that it did not give back much of yesterday's big gain. So I'm treating that as a favorable move. For me, it would have to get below the Z1 for it really to be negative. So I'm treating the 10-day high as the first clear signal of continuation, and then I'll say the bottom of the dragon and the Z1 and the PSAR. So there's a nice support level settling in here between Z1, the bottom skin of the dragon, and then tomorrow's PSAR dot. All of this around 331.5 to 330 to 331, I should say. So there's a tight support level inside here. To the upside, we're like 0.38% away from that 10-day and 30-day high. That high of the day made a fractional new 30-day and 10-day high, but really couldn't press on through. But it was a low range day. So all the indicators are still looking favorable. We have a strong 10-period regression line. The slope of the 30-day regression line is still strong up. Oops. The dragon still sloping up nicely. Dragon extension. And then the PSAR continuing to make solid gains. Even the RL90 has started to roll back up. There was a moment back here where it sold off, got flat, but now it's the RL90, that longer term trend, is starting to pick it up too. So all signs point to yes. The fact that it didn't fail today. So now tomorrow being Friday, it'll be interesting to see what kind of posturing there is in price, to see who's willing to hold it at what price over the weekend. There was no real news to speak of today. Politics was basically spinning wheels. Nothing to see there. So I'll take tomorrow as kind of just another tactical day with no real drivers of price action, no questions to answer. The downside support levels are the low of the day, 335.8. The RL90 and the upper skin of the dragon at 335-ish. Spine of the dragon at about 333. The Z1, lower skin of the dragon down here at 331-ish. Then what will be the 10-day low? So today's 10-day low was down here, but this is tomorrow's 10-day low. It will be for the next couple days. And that, to me, is the real line in the sand. It's got to hold that. And that's at 327.6. If that fails, then it's Bollinger Band mean at 324. You can see that the Bollinger Band mean is now well north of the previous peak fair value. So that's a good thing. The dragon's still kind of straddling the Z1 edge of the river. And all the price action of the last 10 days is comfortably between Z1 and Z2 all the way up. So, optimistic move. Thinking about tomorrow. I'm ready to add positions at breach above 338.20. Let's kind of see what made the difference today. So we had all three of the U.S. indices clustered pretty tightly today in this nothing kind of a day. The S&P was down minus 0.18. The Russell down minus 0.18. The Russell down 0.21. The Diamonds down 0.22. That's as tightly clustered as those three U.S. indices can be. So not much to choose from in between. What worked better today from the sectors? Well, you had healthcare in Japan at minus 0.12, consumer discretionary minus 0.04, basic materials minus 0.02, technology plus 0.04, Mexico 0.68, clean energy 1.6, and silver up 8.7. So a real nice recovery on the silver play that we highlighted as an opportunity yesterday. Wheat and precious metals came back with a 3% gain, getting the recovery from its recent sell-off. And other than that, it was kind of story stocks today. Not much of the, and then the upside symbols. You have Amazon and Walmart slightly less bad than the S&P. Cliff was flat. Home Depot 0.03. Facebook, Google, Twitter. Facebook up 0.5. Google up 0.8. Twitter pushing 38 now at plus 1%. Apple 1.78. Wheaton 3. Virgin Galactic 3.3. Tesla 4, Nikola 7, and silver 8. Things that were worse. Brazil slightly worse. Finance minus 0.63. Energy and oil exploration minus 1.9 and 2.2 respectively. Brazil down 0.23. Emerging markets 0.3. So it was kind of a mixed bag. You had some techs that were suffering. We saw the techs that worked above. The techs that didn't work today, Microsoft, Intel, big losers, Kodak, U.S. Steel, Alcoa, Devon Energy. So this was a time to, what had been good earlier this week, the energy and materials gave back. So today was basically a choppy day, very choppy. We're going to see that. I'm going to take a quick look at Luke's work in Brazil. If I can here. So Brazil had the big sell-off yesterday and compensated with a large gap up at the start. And so you're entitled to have, some upward enthusiasm here. So I like the like the OR5 and then the hybrid frog. That's a reasonable exit on the first one to get paid. The re-entry was here. I think you could get that re-entry here. And then if you experience these dragon horns, I think you gotta get out here. So a slightly better re-entry, and then a sharper capture after dragon horns might have been two had some room for improvement. I like the patience waiting for the Z3 pinch. I think 3 was doomed, and so you took like the PSAR exit here. Even if you had taken the Wu Wei, that was probably going to get hit here anyhow. And then again, I think the re-entry is here and not here, and that gives you something like this kind of a move to capture what you lost. But even that's hard. Then we have really strong support all the way through here. And now we have the RL10. So somewhere in here is where I'm thinking that entry at 5 should be. I think, I don't mind that this is waiting for the Z3 breakout. But if your Wu Wei exit is here, you don't even adjust that until probably this far. Then you pick up the PSAR. And so 5 and 6 would have been a combined single trade. This would have been a positive trade. And this might have 6 might have been a second entry when you get this collapse, this little bit of a up and then down. So watch for your Wu Wei exit here. Excuse me. I'm not offended by this. I think if you notice the Wu Wei exit, that might get you out, maybe not. But I'm not offended by that exit. That's just that was a reasonable effort. You're on the correct side of the VWAP. You're playing for a move to here. So that little bit of risk against that much potential gain is fine. This looks like that fake 1, the Z3 fake 1 go to. And this exit is actually now where I want you entering, tighter in the pocket. That would help you over on this trade here, where you were higher on the stack than I want it like right in the curve of that dragon, that inside curve. And that gives you a chance to make money here. And then this becomes the short entry. Instead of this one, you get a short entry here, and you probably won't lose money on that one. You'll still end up getting out here. Then when you get tired, naturally, that's the only easy move of the day. I mean, there were only 2 easy moves. This first one, the second one, and I could almost argue that that was a move. But today was just a tight range day in EWZ, and felt like you were making a lot of sawdust. But the bottom line was boom, getting it done. Oh, I guess you did take 12. I'm sorry. Well done. Nicely done. Yeah. So you didn't get tired. You stayed with it. Well done. I like the tight risk control all the way through here. And there's a few areas where we could tighten up a little bit. That doesn't make much difference that might give you an extra 1 to 2 XRs. with just a little bit. But that was kind of the the trade today. Was there just wasn't much room anywhere to be found. There were no other charts posted, so I have nothing to talk about there too. I spent a lot of time today going through the psychology work and the anxiety work, anxiety and things like that. And then also doing some work on mental mapping, and I'm drafting up an outline for an update to the legacy swing trading course. So let me just cover that for a second, if I may. Sort of a preview of coming distractions. Come on, Paint. Work with the brother here. There we go. Okay, so we've had a number of new folks join lately. So here's what I want to say. The the core makes decisions like once a month on that blended monthly rebalancing, and in that month of 4 weeks, if we said that each of those was like a swing, four cycles this is really where I'm looking at those kind of weeklies, those weekly reports. And there's two sources of trades. There's a mechanical, and then there is the pattern recognition, and that's going to be like RLCO, weekly SSC, and SFC, things like that. Regression line fractals, owls, collapsing dragons, and the different patterns that we recognize from the different lenses. So we're looking for pattern recognition, and then managing the daily bars as if it was like an intraday turbo trade. So the mechanical trades are very robotic. Those are systems. And then the strategies are these different patterns. So taken collectively, there's like two different ways that I go after these swing patterns. And the swing trades are going to last anywhere from like, in choppy territory, it could be 1 to 3 days and just getting paid. Typically, when volatility smooths out, it could be anywhere from 3 to 10 days. And I'm not offended if those just keep growing. And then what turned out to be a good long swing trade that just keeps working, that ends up becoming sort of like a core position. So really good swing trades can drop down to become core positions paid for with market's money. And then the day trades inside each week, you got those 5 daily sessions. Let's see, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So each of these is its own little category of trading. Intraday trading, weekly trading with swing trades, and then the core with blended monthly rebalancing. Well, the idea behind hybrid trading is that when things are really volatile, that we can take a look at the entire category and do core and turbo, so that sometimes a good swing trade, we can add a turbo position on the day. So we're straddling day and weekly. This boundary is not really a boundary. And then sometimes those swing trades can grow to become core positions, and sometimes we'll take a core position and look to see how we can get turbo on it using a swing trade. In a perfect world, something that we're holding in BMR has a turbo swing trade, and then we see an opportunity to turbo day trade it. And that's like the ultimate of hybrid trading. So if I was going to call this day trading, swing trading, and core or position trading, then hybrid trading is all of this space that takes advantage and synchronizes in between the different buckets of money and the different systems. And it's looking for, a swing trade that starts off nice here and it's still going. Hey, on this one, it might have also become a good couple turbo trades inside here because of reasons. And then, it comes out, and then that was the end of that. It was like it may have been a 2.5 week trade. We might have had a couple opportunities to add turbo, or this thing might have just kept going, and then it drops down and becomes a core position. So this hybrid trading really encompasses all three of those other separate and discrete ones. So that was the hybrid trading workshop. Then is what we did from about mid-March really to the end of July, and we're carrying it over a little bit now, but it's kind of filling in the gaps. But basically about 15 March to 1 August. And so now I feel like the next thing that needs to be done is to come back and revitalize and reorganize the swing trades and take into account some of the things that we learned in the hybrid trading that will make the swing trade even better. So I had some people sign up just for swing trading. So I think I'm going to look to, on Tortoise Capital, there's a basic and an advanced swing, the two legacy courses. So I think I'm just going to merge those at some point and just call it a new swing. And I will update that. And I got the first outline of the lessons for today. So those changes will be coming in over probably the next month. And then that may make the weekend report shift a little more of its focus to those speed runs into the to the swing systems. Again, for those of you that haven't really looked at that yet, get caught up in the day trade stuff. It's pretty easy to do. But the baseline of those is those mechanical swing systems that can be robot traded. That's the 5-day down, 551W, triple screen, the washout, channeling, and overreaction. Plus, there's a continuation pattern for each one of those. So those are all robotically tradable. Like you can actually trade them by rules so that it's purely mechanical, no interpretation. You can modify those so that they become pattern trades. And then you can use all these other things that second generation RLCO, and then some of like the SSC kata is going to work nicely for you there too. But all of these are more like pattern trading. But it's going to start with a mechanical review of the mechanical rule sets, then the patterns that we trade, and then it'll include portfolio management, some of that stuff too. Okay, so that's the next update in courseware is rejuvenating the swing trades. And the reason for that is I just think swing trading is the basics for, you can go turbo in that direction. You can use it to hedge the core. and this uses end of day data and standard framing in the evening, so you can prepare at 5, 10, or 20 when the market is closed. So that seems to me to be a sweet spot for getting these short moves that happen 1 to 3 to 5 days lately. Okay, so preview of coming attractions. All the Patreon Platinum, Gold, and Silver subscribers will get that course just as part of your regular subscription. If you're not one of those, I will sell it as a separate workshop if you just want the workshop but not the subscription. So I'm going to shift right to the day, the daily report, and give you some time because I have to run back to the soccer field tonight. I got to meet some players that couldn't come to practice, but we got our first game this weekend. I got to head back to the field here now. So let me find our daily report here. Well, that's loading. I had a really good exchange with our new commanding general. I think I told you guys that I had invested some personal reputation capital and sent him a couple challenging emails. He responded really positively, and we had a really good exchange about the future of the college. And I think it helped plant some seeds to start shaping the educational environment around here that'll be really good for the officers. So a lot of it was mind mapping and critical thinking and outreach to the community, and he was very, very responsive to that. So that felt pretty good. Let's see. So there we go. Okay. We've seen the daily. And here were a couple just grab your attention by the throat. Federal debt and deficit. So what this is telling you is it doesn't matter who's president because there's no coming back from this. We're closer to Zimbabwe than we are to Switzerland. Shapes. Yeah, this kind of this was digging out of the hole from the fiscal crisis. So this one tells you that was twice as large because you have this and then this. And then federal spending through July in constant dollars. There's just no recovery. And we still don't have minimum wage, guaranteed income, guaranteed jobs, healthcare for all during the middle of a pandemic, and 25% unemployment, and the moratorium on mortgage protection is over. And so there's 10 million Americans that are wondering exactly where they're going to be living. So this is not looking good. Meanwhile, the market doesn't care. It was bullish normal and overbought on everything, and a recovery on the 3-day NDX. You wouldn't know we had any troubles looking at this. The risk Z is still holding steady at neutral and risk on. and we're still 8% above the sideways. ADX is still strong up. The failure to fail today actually made the ATR improve. The non-techs are still the leaders in the clubhouse for the minimum pain, and Cisco joins the 10-day max pain. I like that Devon Energy's in there. I'll be stalking that one for tomorrow. Plenty of dojis today because of that narrow range day. And actually some pretty good auto framers here. So Cisco, Pfizer, Walgreen, IBM, and ExxonMobil. You can see that Cisco has a strong fraud quality number, has a single-digit RSI, is dramatically underperforming on all of the look-back periods from 1 day to 3 months. And then is also not especially good on the 6 month and 12 months. The only reason it's not triggered there is because ExxonMobil had been smashed so much. Let's wonder what Cisco looks like here. Yep. That'll certainly get your attention. Well, here it is all the way down at fair value. So we're going to start watching this rascal. This is the last support level that it hit at 42. So I think I would buy a resumption to the upside on that one tomorrow. Like I think I'd be direction neutral inside here. And I think I think I'm ready to go long above fair value. At Z3, that's almost a Z5 excursion to the downside. Down 11%. If that breaks, then what are the targets to the downside? Well, it's got to break below this lower hump of the dragon and the RL10. So if it goes below 41, then the next low, I guess, is going to be way here. The turning point in the Bollinger Band mean. I think that's the next one, is 39. And you can see the upside on that thing. So we'll be watching Cisco pretty closely tomorrow. App, on the other hand, if just keep it simple, Apple, all good all day. Apple and Cisco, the tale of two techs. And Apple was a doji. So how do we not love that? Even more dojis in the ETFs. Treasuries are really testing the long-term holders there. And gold posturing had a nice recovery today, as did silver. That explains Wheaton. It was energy's turn to suffer with XLE and XOP. But silver looks like it's back on track. So Wheaton is on my list now. Silver and Apple. I'm going to add Procter and Merck as healthcare. I'm going to go check out the pinch in Cliff. Yeah, so this Z3 pinch in Cliff, and it pushed a little bit higher to 6.5, has pulled back to the edge of the river, and then rebounded a fraction today to close basically where it closed yesterday. So I'll buy that second day of momentum, like right there. That is my trading box. I'm sticking to it. I'm ready to go in either direction on that one. I will play the breakout in either direction as a swing. And the reason for that is I like the upside target here, and I like the downside target down here at the PSAR. And that's a lucrative trade in either direction compared to the risk. I wouldn't even be offended if you just split the difference here. So if it broke out to the upside, I could get long at whatever that number is, $6, or short at 584, and then use half that box for my execution risk, and then play the trade in that direction. So I'll be doing turbo trading on CLF tomorrow. I'm going to dial down and take a look at the minimum manageable risk box. The tightest pinch that it had looks like I'm just going to call it like right about here. That's only 6 cents. That's 6 cents. That's a 1%. So I think it's safe to use like a 10-cent risk box tomorrow for CLF. That's going to be my plan. I like the fact that it is pinched, and it had an upward surge and a 3-day pullback, and now I'm ready to play that as a breakout. Yep, that looks pretty good. Yeah, that's what the if I go to the hourly charts, that's what that little yellow box that I split the difference on the daily. That's what that looks like. Yeah, I'm ready to go long at 6 and short at 585 with a 10-cent trailing stop initially. Okay. Lots of good choices here in the auto framer. Cisco has now joined treasuries at better than 3-1. IBM keeps coming up on my radar for some reason, and it recommends about $1.70 for the initial risk. So even if we called that $2, IBM is probably worth framing. I'm becoming more of a stock picker or target selection now. Now that the markets are slowing down a little bit, there's more differentiation in the symbols than there are in the indexes. Yeah, so that's a pretty nice quiet channel right in there. From Z1 to Z1 all the way through here. Yeah, I think I would play the breakdown. Actually, I would go this tight. I would go as to the belly of that RL10. And here's why I say that. I like this sketch here. Yeah. Let me get the price back on. There we go. Okay. This looks like a critical state in this because you have a strong move up, strong move down, strong move up, strong move down, strong move up, half move down, half move up, half move down. So you got this range compression. And so that makes the breakout is going to be bigger because you've got this range compression. What I'm hoping is that something like this happens, or even one of these big moves. So what I want to do is get short. Like right below this RL10 right there in the Bollinger Band mean, so that I can get like a 1, 2, 3 targets. So on that much risk, I'm getting 1 gain, 2 gains, 3 gains. And then if this whole thing breaks, then this is the next box. The next 2 boxes look like that. And that makes this to be in play. And then this is in play. Now, I kind of like the fact that it had a higher low. And that's what led to this nice upward move, where it got to Z3 or Z2, but it didn't get to the previous test. It only got to the previous RL10 and then rolled over for 3 days. So this would be my first position short. But then this PSAR dot now becomes my first position long. So I'm using this as the yellow zone in here as my risk box. Then if it can break above that price, I'm almost ready to say if it gets above this price. So this is where I would add a second one on that one and a third position on this one. So if it gets above like 135, we are free and clear, right? Because the next support level is this. And then we'd have 3 positions running wild. So if I take the size of this move and say that's the size of the next move, yeah, that would be 1 leg, 2 chunks. Yeah, that feels pretty good. So IBM, I think, is in play. That's old tech, not groovy. but it's certainly in a nice critical state. I kind of like that one. All right, so that's IBM. And that comes up from this the Auto Framer report, where it's showing 2.3 to 1. Nothing wrong with that. The daily squeezes fired today. You get a lot of those signals and lots of really good reward to risk ratios. And that's going to be a function of how narrow the range was today. That range compression creates a nice tight range risk, and then the breakouts can be good. And there's some Microsoft and Disney for you. The S&P itself is right in there. Probably McDonald's is worth looking at. So is Walmart. So there's some good natural trades in there. Oh, and our old buddy Home Depot, which just can't lose. The summer is beginning to dominate. Only Brazil and Latin America are suffering in the winter. These guys don't have much more to fall. That's a really significant sell-off there. 3 Sigma. Interestingly, the techs are lagging a little bit in terms of their MACD Z-score. And the Dow has been better. Disney and Apple for the win. I just don't like Nike as a company exploiting labor. Amazon and Microsoft in pretty good shape in the summer. Apple and Procter. This was energy and exploration getting smacked today. Caterpillar is kind of the tale of two cities. It's the best of times or the worst of times. So we saw some moves earlier last week in Caterpillar where it got framed nicely. And so Caterpillar had that night. So it gave us all 5 of those little risk boxes. If you recall, went back and listened to the weekend report, we talked about how when it was down here in this critical state, I'm going to make this orange just a minute. So we were in this kind of choppy range-based market, right? And you are trading between these measured range boxes, right? We saw this one as a willingness twice in the last 10 days to get to 142, and yet on a 10-day basis, it had sold off and made a double bottom down here at 131. So there's a $10 on 130, which is about 7.5% of gain, and with a pretty tight doji and risk box here, that if it broke out of that, you could be long. In the first 2 gain boxes, we said would probably be easy. The third one would start getting tougher. So we actually made some money in here, and then this became a great turbo trade. The follow through was great, and then it's done nothing but sell off. So when we're talking about those swing trades, those 1 to 3 to 5 days, and you get those excess outsized gains, you got to make bank on those and be ruthless about capturing the gains. Buy it on sale, sell it as a special, and you're the middleman in that inventory management game. And so it did that here, and it did that here. And now it's setting up nicely. Is it going to find support at the edge of the river and then start a third leg up? Or does this collapse here and come back to the Bollinger Band mean and test those lows? Well, since you don't have to make a prediction, you can actually just play a really tight range box there on the on the real body of that daily trade, which I'm going to do just like this. I'm willing to trade that in either direction. If it breaks below that RL30, I just call it the Z1, but I think I'd be ready to go short at the first sign of weakness tomorrow. I think that's what I'm going to do, is be ready to be short right there. So in practice, that means I'm going to put a really tight hybrid frog or MMRB straddle on that thing and then play in either direction. And then I would add a second position if it broke above this big orange dot at about 141.5. And then if it broke probably above the daily high, I would add a second position, because I want to try to take advantage of these kinds of big mover days in Caterpillar. So there was a lot of buying pressure all the way up to 146, and those guys are suffering. So if this actually holds tomorrow, it starts to go back up, then all these guys will be validated, and you'll see a bunch of buying pressure that comes in north of 141.5. So that's what I want to say about that. I think that's just about everything I want to say on the daily. I want to give you back the time, and I got to hustle back over to the field. I'm meeting some players in about 15 minutes. So let me check real quick on the yeah, I guess that's Betty. Yeah, I'm trying to demonstrate here. There are some times when it's just really the market itself, and if you get the big call right on SPY, then everything's okay. But now it feels, as that starts getting range compressed, you're going to start to see more of the stories and the bigger movers moving outwards towards the sectors and to the individual companies. And so what I'm doing here is trying to show you different ways in which you can find trades that are in your niche. Okay. So that's everything I got for today, guys. I'm going to get this produced and hung quickly and posted. I guess I do want to say this also for the Patreon guys. Let me pull that up.